In this video, I want to show you how to identify a false breakout that happens above resistance. So this is a daily time frame chart of silver. This is in dollars. So let's see what is going on this chart. This small candle is extremely important because that's where the rally has stopped. I have drawn a blue line at the high of that candle, and that candle is very important because if you see what happens next, the high of that candle has not been breached, it has not been broken. If you take the high of this candle, then it was broken by this green candle. That's why this small candle is a very important candle. I call it I call it culprit candle. This is a concept which I will discuss in some other video, but that's the culprit candle where everything stopped. So that's why I have drawn a blue line at the high of that candle. Okay, look what happens next. This is a bearish engulfing pattern which confirms that blue line. So it provides a successful test of that blue line, and bearish engulfing pattern is a very strong bearish reversal pattern. So the price goes down as expected. So step number one is to identify that proper line where you need to draw the resistance. Okay. Step number two is to find a successful test of that resistance. So now this blue line has become multi-tested resistance. Multi-tested means tested at least twice. Okay. Step number three is to wait for that breakout. So this is where the breakout happens. Now the problem is, how do you know whether it's a genuine breakout or a false breakout? Now if it's a genuine breakout, then you know what will happen. There is a concept called as change of polarity. In change of polarity, what happens is old resistance becomes new support, or old support becomes new resistance. So in this case, you have old resistance and this is multi-tested resistance. So that should ideally become support. So price should go up and then come down and bounce from here and then continue upwards. That's called as a genuine breakout. A false breakout means the price goes up or maybe the price falls down, okay, immediately. That's a false breakout because on this candle, as you can see, the bulls are more powerful. Remember, in candlesticks terminology, every candle represents a battle. So on this candle, the battle was won by the bulls and it has broken out above resistance. So the bulls are very powerful on that candle. Now we have to wait for the next three candles and see what happens. If any of these three candles closes back below this blue line, which is resistance, it means that the bears are not allowing the price to remain above that resistance level, that blue line, for a long period of time. So which means at that blue line, the bears are very powerful. So which means this is a false breakout. So we have to wait for the next three candles to see what happens next. If any of these three candles closes back below the resistance, it confirms the presence of bears at that particular price level. Okay, so let's see what happens next. So this candle is a very important candle. It achieves two objectives. One is it confirms the breakout which is false. Okay, it confirms that this breakout was a false breakout. Second, it's a bearish engulfing pattern. If you look at these two candles, that is called as a bearish engulfing pattern. Most important third point is that any candle which opens above resistance level and closes back below that level, that itself is very bearish. That single candle itself is reason enough to go short. In my experience, this has been very much true. Just a single candle which opens above resistance and closes back below resistance itself is a very strong reason to go short, because it clearly demonstrates the power of the bears on that candle. The bears are saying that we are not going to allow the price to go beyond this level. Okay, so those are the three objectives that are achieved by this candle. So, and bearish engulfing pattern is a bearish reversal pattern which allows you to initiate a trade. So you could go short here. So that would be your entry point. We know that the high of the bearish engulfing pattern becomes resistance. So that's your stop loss and that's the target, right? What's a bearish engulfing pattern? Well, the second candle completely engulfs the prior green candle. Both candles should be of opposite color, and the bearish engulfing pattern must come after a uptrend. The shadows do not matter. What matters is the real body. One more condition is that the the first candle should be as small as possible. The second candle real body should be as tall as possible. So those are the conditions for a bearish engulfing pattern. Now, if the same pattern appears after a downtrend somewhere here, then it is called as last engulfing bottom, which I will discuss in some other video. Okay, so that's your entry, that's your stop loss, because the high of that pattern becomes resistance, and that's your target. So if you look at the reward to risk ratio, this is your reward, this is your risk. I think you have a 4 is to 1 or probably 3 is to 1 reward to risk ratio on this trade. So let's see what happens next. The price went down as expected. Remember, reversal doesn't mean that the price will go down. Okay, reversal pattern means the price might either go sideways or it might go down. Okay, that's the definition of reversal. People tend to forget that this is a possibility, but it is very much a possibility. Here in this case, the price went down because there is a clear indication of a false breakout. The market understands that it was a false breakout and the price collapsed as a result. It did not reach this target. However, the market gave you enough reason to exit. So, for example, if you look at this pattern, this is called as a piercing pattern, which I will discuss in some other video. Anyways, if you want to learn more about Japanese candlesticks trading, you can go to this link. I have created the Japanese candlesticks trading mastery program. It has multiple levels of training. It has more than 1000 chart examples like this. Students from more than 170 countries are already enrolled in this program and they are doing the program. So go to that link, have a look at some preview videos there. Consider starting the program. Invest 1 to 2 years of your life doing this program. If you have already if you are already using a trading system, so for example you are trading futures, options, or some other trading system which was taught to you by someone, I encourage you to continue using that system, but on top of that you add this candlesticks knowledge, so your trading success rate would go up. So if you are getting, let's say, 5 out of 10 trades right, then go for 6 out of 10 trades right. So additional candlesticks knowledge will help you enhance your trading success rate. Okay, so that's what I wanted to discuss, the false breakout above the resistance. And notice I haven't used any Western indicator here. Without using any Western indicator, we have done so much analysis on this chart. So this skill is something which is worth investing in. Without even looking at indicators, if you can start reading the markets or reading the charts like a book, that's a skill that is worth having. Okay, so consider doing that course.